Good day to everyone. It's Monday, 12th of May. Hope everyone had a wonderful weekend, that we are ready to ride these markets. Let me know if everything is fine. As you can see, the team is here. Team, if you can type in if everything is fine. Can you see the screen? Yuan is also here. El Khalifa is here, our member, so hope you're all doing good today. So, as you know, we have seen a pretty interesting start of a new trading week. Now, this since we have Trump, these weekends are always very interesting. Let me just share my screen here. Okay, so someone is saying that I'm a bit quiet. Okay, it's now sound better. Let me know if I'm too quiet or too loud, please. Okay, as you know, we have seen, as I said, pretty interesting move. The dollar is coming to the upside based on the fact that US is looking to cut tariffs on Chinese goods to 30%, down from 145, and China is looking to lower tariffs to 10%. Okay, so this is looks like we have some progression on the trade deals, but these news are coming out from the US. I'm not sure if China has confirmed any of it, but when it comes to the markets, we can clearly see that there's a lot of optimism going on, because obviously if normal global trade is going to resume, or at least if we are progressing, then this means that economic activity obviously could keep stock markets in uptrend, but as a result, even US yields will also be looking to trade higher, because then obviously markets thinks that if there will be more economic activity, it means that US yields obviously could rise further. And on top of that, we had Powell, who is not rushing with cutting the rates. So that's why US yields are also trading to the upside, and at the same time dollar is following these moves. And you can see the sentiment and what is going on this chart. It's correlated chart that goes back from start of May. You can see that Bitcoin, crude oil is also up, obviously, because if there would be more demand, more trade deals, it means that there will be more demand in general, and this will bring crude oil prices higher as well. We can see US yields, as I said, also trading to the upside, and on the other side of these trades, we have Japanese yen that is trading to the downside, as well as gold. So we can clearly see that we are in the risk on environment, but keep in mind that, as I said already, almost in each webinar, that always when you see some very sharp moves on Monday, first day of a new trading week, this can easily be reversed through the course of the week. Okay, so keep in mind that despite some very strong move to the upside on the US dollar, we can still be running into some resistance this week. So if we go to the charts, as you know, last time we said that the only thing that worries me why the dollar could trigger a higher correction was the 10-year US notes. Okay, and we have been looking for a wave C drop, and we can see that this is now progressing very nicely. The US yields are trading to the upside, and I think that the very strong resistance is still not here. It's slightly higher, around 4.6% on the 10-year. So obviously the correlation has been broken through most of April, but then when we got this non-farm payroll report, the first one, it was was quite good for April. That was one thing that put correlation back into positive between US yields and the US dollar. Then Fed has said actually that they will not cut the rates, and now you have this US-China trade progress. So this now looks like that we have some positive correlation. You can clearly see here I have the dollar index and then I have the US yield. So both are now trading to the upside, while we had here from start of April some negative correlations. So what I'm thinking is that when the US treasuries will complete this ABC pattern, possibly after retest of this April 11th lows, that's when dollar resistance would be much easier to recognize. Or I should say, maybe if that would be cause a bounce to the upside and the US yields will find the resistance, that's when also we can expect that the dollar will turn lower. And if you take a look on, but obviously this can already unfold in the next few days, okay, this week. Also, if you look at the dollar, as I said, whenever you have a very sharp moves on Mondays, keep in mind that this can be seen as a reversal by Tuesday's price action. And if you zoom this out a little bit, you can clearly see that that's a very nice, beautiful bearish impulse, and that we are basically, despite this very strong day to the upside, we are not even at the 38.2% yet. Okay, so it's still all fine this to be seen as a wave 4, and we can see that there is the lower side of the this resistance range. If you look at the previous fourth wave consolidations, the upper side also matters, sometimes even much more than the lower side. It really depends how extended the fifth wave really is. But since, as I said, the 38.2% hasn't even really been tested yet, maybe we are still here in subwave C of wave 4, that could slightly push prices a little bit higher, but I would expect a reversal, as I said, this week. So I'm watching this one very closely, and I really like the pullback on the euro, but somehow I like commodity currencies more now. If you look at some of the intraday charts like euro dollar, you will ask yourself what the hell is going on, but then you will check maybe some of commodity currencies like Asia or Kiwi, and on the 4-hour time frame they are basically still looking fine. So looking at the euro dollar, we came back to this 1.11 levels. It's the first support that matters. The deeper one is at 109. So this whole area obviously could be a very important reversal zone for the euro. And I will say that as long as we are above 108, I just still think that there is a chance, 107, there's still a chance that that's a wave 4. But of course, if we'll start breaking 108, I just think that then maybe we'll have to adjust the fuse a little bit and look for something else here. But for now, with this kind of a pullback, when you still have only 3 waves from the highs, obviously it's very important just to realize that this can still be just a pause within uptrend. Okay, looking at cable, this one also came very nicely to the downside. We just retested the 23.6% retracement of extended wave 3. If you were with us in the past webinars, then you know that I had slightly different wave counts, but now I adjusted it because this somehow fits to be much better to be a wave 4, especially if we are looking at something similar on euro and the dollar index. And you can also look at the base channel here. That was a mid line here around that comes in around 1.3130. So it was pretty close level, pretty close lines, and always when I'm tracking fourth wave pullbacks, at least if we have some very clear directional movement within this impulse, then some of these lines can represent the important support for this wave 4, and it's much more important and significant when you have also the fib levels coming around these trend lines as well. So as long as we are above the lower trend line, I just think that this still can be a wave 4, but if we start suddenly falling back beneath 129 out of this base channel, then obviously I would most likely adjust the wave count. But for now, this looks like a very nice support zone for cable here. So don't be surprised if we see a reversal in the next few days, even if we go a little bit lower and retest the recent swing low, still could be fine and part of this wave for correction. So for me, it still looks like a pause within uptrend. Okay, now let's take a look also on Aussie. Now Aussie is, as I said, still looking fine here, and last week I think that we discussed about this potential pullback. I said that we could be even in irregular formation. I even highlighted the potential head and shoulder formation. So that's your left shoulder, head, and now you're in a right shoulder. So very nice support certainly could be here around that's 63.40 area, and then slightly lower where you have this channel line as well. So I think that that's pretty interesting zone where market, I believe, could stabilize this week. But as I said earlier, it would be much easier if the US yields will find the resistance at the same time, and still we see some room for a slightly deeper pullback here as well. Okay, for what, around 50 points or so. So I think that that's a pause within new recovery that will send us higher. Of course, maybe some will say that what if this is wave C and that was wave A and you are now in a wave B? Well, actually it's a very valid structure or idea as well, but at least in the short term, after this correction, we should expect then a new bounce. So as long as the market is holding these levels, I will be looking for potential new continuation higher here. Now looking also at dollar versus Swiss franc, as you know, Swiss National Bank, they said, and we mentioned this last time as well, that if needed they will intervene if the interest rates are not enough to lower them to bring the Swiss franc to the downside. Then obviously they can intervene in the FX market. Now looking at dollar Swiss franc, if we try to maybe to recognize maybe when some serious weakness of Swiss franc could show up, well, it can be after a completed 5 waves down. And what I see here right now is that we are at a very beautiful resistance. We're at the former wave 4 and at the 38.2%. So maybe we are very close to this potential reversal. Also, you can see Sunday gap. Okay, gaps from this weekend. As you know, these gaps will very rarely stay open. So that's another indication why maybe we should be aware of potential reversal here in the next few sessions. But as maybe the most important pair whenever there is a potential for any kind of intervention is not dollar Swiss franc, it's the euro Swiss franc. Okay, because obviously the European countries are the largest export region for Switzerland, so they are watching this cross rate much more than any kind of other cross rate here when it comes to Swiss franc. And here, if you look closely, we are not even completing this downtrend yet. Okay, but we could be close. But I'm watching this potential wave 5 drop, and wave 5 could be an ending diagonal, and that's a very powerful, very strong reversal pattern. And if maybe they will act, it could happen if euro Swiss franc is going to see a break to a new low. And based on Elliott wave theory here, certainly would suggest that we will be in very late stages of this impulsive decline, and that some serious recovery could be happening still maybe later this year. Looking at dollar yen, what's very important about this one is actually there are two things. First is that we haven't seen a push here below 139.60, which goes back to September of 2024. Okay, and now we are seeing a recovery above 146.46. This makes an overlap with this wave A, so it means that this drop from that high is not impulsive anymore. Okay, that's not impulse. Impulse has been invalidated. So what we are now looking at is that that's, if not impulse, then we know that most likely it was a corrective ABC drop. That belongs to a more complex correction if we consider that this was also some kind of a free wave movement, and a very strong reversal actually occurred here. back in mid of 2024. So what we are looking at now, some different scenarios are on the table, but my preferred one is that we are in a triangle. Okay, so it can be a triangle, and now you are in this subwave C. So maybe the first resistance could be seen around 150, 151 area, maybe already sometime this week. And of course, the reason why Japanese yen, dollar yen is coming to the upside, you have both higher US yields and higher stocks. So that's the best potential scenario for dollar yen to see a recovery here. Okay, but watch out for potential resistance and limited upside there around 151 area. Now looking at also some of the cross pairs may not be a bad idea these days, especially when you have commodity currencies still holding up pretty well. And here we are looking at pound versus New Zealand dollar. We have seen some very nice throw over formation and a bearish reversal pattern, and notice that we are trading back in this wedge zone. So I think that top has formed, and if I have to pick some levels here, or maybe do some closer analysis what may happen in the next week or two, well, notice that that was very nice push to the upside, reversal, and now we have another potential head and shoulders here formation. So I think that we are now in a right shoulder, but maybe not finished yet. If I look at the substructures, then you know that if we are now in a correction, that it should be made by 3 waves. So you could be now in a wave C, maybe ready to retest slightly higher resistance around 2.2680, or then you have this level as well around 2.2760. So this zone, in my opinion, is quite attractive, quite interesting, while the market is trading below this invalidation level. Let me also check some of the pips here. So you can see that we have very nice resistance around the 50% retracement, and then you have also the 61.8% a little bit higher. So I think that this zone up here could be very interesting for potential sellers. Now looking at gold. Gold, as you know, has seen a very interesting reversal, but is basically still some kind of a sideways here. But this just shows us that there is risk on sentiment, that there are not aggressive moves or flows into metals, especially not because it was some very extreme optimism through most of April, and we know what then usually follows. The market makes complete opposite reaction, and now we are still flat formation. Okay, and I have another scenario here that I'm also keeping an eye on. If we consider that maybe that was an expanded flat for a wave B, and then again you see the quality level for the support around 3,180 around there. So regarding gold, we either wait on a potential spike here below that level, and then I would not be surprised to see a reversal. There must have been a lot of stops placed below that level as well, and that would be maybe then the perfect scenario when the market is going to turn. Or if we just stay sideways while we are above that level, then we will have to wait a bit longer before we can say that ABCDE formation is finished. But I still think that that's a very nice consolidation within a high degree uptrend. But as I said already a few times in the past few weeks, that I love silver much more, okay, because it made a very beautiful 3 waves to the up, sorry, 5, not 3 5 waves from these April lows, and now we are just consolidating. And what's probably the best thing when it comes to this consolidation is that we can already see some kind of a personality that has a corrective look, okay, because we are not really progressing to the downside much. We are just chopping around here, so it makes me think that we are really in a wave 2, but still it can be a little bit more complex because that leg up from start of May has been made by 3 waves, but then you also have this 3 wave drop. So maybe something more complex can be in the cards here. But if we see any kind of a drop into that yellow box, I think that that could be a very beautiful support, especially because, again, I would not be surprised if there are some stops below that level. So maybe 3160, 3950 could be very interesting zone for potential retest of these lows, for some liquidations, and then we see a new resumption higher. But the most important thing is that we have here 5 waves up, followed by now a consolidation. Okay, looking at German DAX, this one has seen a move to new all-time high, so obviously we are progressing higher, but notice that that's still not 5-wave movement yet. So I think that there will be actually room for more upside, but don't get too excited at the start of the week. We have some open gaps a little bit lower. So now when everyone will try to rush into these markets after any kind of this positive news between US and China, you know what usually will happen. The market maybe could make the different reaction that most expect, because keep in mind that that most of the moves is already being priced in, and this market started to recover as soon, not only this, the S&P 500 as well, it started to recover as soon as Trump took a pause on the tariffs. Okay, so back then it was clear that he's making some changes, some step backs, and that he is looking to negotiate. Okay, so we have seen a pretty strong moves to the upside. That's why that now when we have this some positive news finally coming out, it will be maybe a time for some retracements. Okay, that's unfortunately how the market works. So because of a lot of things can be priced in, still, if you're looking to join the trend, I would rather wait on some pullbacks first. There's a very nice support on dips at this spike from last week, okay, from a week back. So that could maybe mark the end of potential flat formation here. But there's even a chance that on DAX, maybe this could be wave 3 and you will still get wave 4, but then maybe some deeper supports first. But still, I think that this zone could be very attractive if you're looking to join the trend, while the market is obviously should remain above this invalidation level. Now looking also at the S&P 500, so where the S&P 500 is currently trading, I'm missing one chart here. Anyway, we are at this resistance from end of March. Okay, so we said that this whole zone up here is a very important one. Then you also have the 78.6%. Plus we have this gap still that obviously it's unfilled. So I think that this should be very important potential resistance zone. There's basically a chance that we are in a wave 3, but still through the week be aware of some retracement. So again, I would not be buying this market just like crazy into the start of a new week. Just if you are very bullish, maybe you just rather wait on some retracement. So I think that if we get a retracement, and if you're looking for, if you will be looking for market to buy a dip here, then obviously this would be much more appropriate after the gap is going to be filled. But as I said, this now it's a very important resistance. The 78.6% is also slightly higher here. And by the way, it's very difficult to count this as an impulse. I don't know what should happen. Maybe I would rather have to look at some kind of a wave structure online chart, but then maybe I would be forcing the wave counts a little bit too much. So firstly, I want to see how the markets reacts at these levels, and then if we see a corrective ABC drop back into this gap area, I may go for it and adjust the wave counts. But for now, still to me, this looks like a corrective rise. So there can be some limited upside, but it doesn't mean that I'm bearish. What I actually think it may happen in the next few months is that we will be just chopping around here, and potentially we will try to build some kind of a triangle until some final deals are going to be confirmed. Okay, but because keep in mind that everything what we see is just for 30, for 60, for 90 days. Okay, so we need to pass these days to finally figure out what they're really what kind of a trade deals are really on the table and are confirmed, and that's when maybe we can expect some serious moves out of consolidations. Someone is asking, yes, please press the like button. Someone is asking about gold. Basically, I covered gold just a few minutes back. Now, when it comes to stocks, the S&P 500 seasonality chart, keep in mind that we are maybe still in the mid of May. So this consolidation, as I said, maybe for this week still could see some kind of a retracement. And as I said, because we have these gaps, I would not be surprised to see a move down from current resistance, the 78.6%, a little bit higher. And I said earlier that maybe summer could be some interesting moves for potential breakouts. If you look at the seasonality, that's actually perfect scenario what could unfold, especially if this triangle would really could really come into play. Now let's take a look on some of the single stocks. I don't have a very long list today because I didn't have much time, because the markets were pretty volatile. But I will take a look at Tesla, Nvidia, Nike, and MicroStrategy. Now looking at Tesla first. As I said last time, we have 5 waves down, so we can expect some consolidation. Looks like that this consolidation will be higher. We can already see that we are trading 3 minutes before the open at the highs. So looks like that we are in a wave A, and after wave B retracement, I would be looking for a move into 61.8%, and then let's see what happens up there. But as I said, because we have this pretty powerful pattern here, you should be very careful when we reach these levels. But for now, at least for the next few weeks, and after this retracement in a wave B, I think that Tesla could actually hold this support where we basically filled this gap before market turned higher. Looking at Nvidia, this one is holding this lows pretty nicely here from the April 08 or so. That's when actually Trump announced a 90-day pause, I believe. So what we are seeing nice, it's a very nice, beautiful recovery, and I still think that there is room for 131.25 area. It's where wave C would equal to wave A. Why I'm highlighting this is because you can always, you should always just be aware of some alternate views, okay? Because alternate scenarios will actually allow you to be much more careful when it comes to potential trading setups, if you will have much more closer targets rather than focusing just crazy on some targets at new highs. So I always try to go with the markets and with my Elliott wave analysis step by step, and not predicting too far into the future. Okay, so 125 is a very important, 130 it's a very important level, but if we start breaking this through, then I think that we could seriously be in a wave 3, and then obviously I would say that we are completing this counter trend movement. So looking for wave 3 of wave 1, so 161.8% is around 135. So if we see this price printed, okay, then I think that we can say that we are in a wave 3, and after pullbacks, after any kind of a short-term retracement, I would be watching for more upside. Okay, but overall, of course, I am seeing this whole pullback as a corrective. It can be finished. I'm just thinking if maybe something even more complex could unfold here, especially if we fail to break above 130 area. But so far, of course, this looks very good for cryptocurrencies as well. But before we go there, I still have to cover Nike. Something is lagging here today. Okay. Firstly, if you look here and compare the current consolidation with the one from this was from 97, you can see how long we were in this consolidation, and looks like it can be the perfect wave 2 and now then a perfect wave 4. Obviously we are looking this at a very big scale, but I think that very strong supports, technical levels can still be visible on this chart as well. So around $50 we had this previous consolidation. So I think that this could really mark the end of the higher degree retracement here. We spiked into these support levels, potentially even with the wedge formation, with the throw over here. So if we can hold the recent swing low, I just think that there can be much more shiny times ahead here, and I would not be surprised like to be trading much higher. Also, as I said, looking at MicroStrategy, this one is here. Looking at log scale, we are progressing very nicely to the upside out of this corrective channel. So I think that fifth wave here is still missing, and you know what this means for Bitcoin or cryptocurrencies in general. They are basically recovering very nicely, but you will have to be very careful once we'll reach new highs, especially if these highs will be maybe delayed a little bit, and we will see new highs maybe during the summer or after summer, because that's when this time cycle, okay, will likely bring us to very late stages of this bull run. Because if you look at this bull runs from 2015, each pullback that has ended after what, around 12 after 1 year or so, what we have seen later on is a 3 year of a bull run. And now if we compare this current 35 months, okay, from the latest swing low here, which was back in November of 2022, we can project potential end of this cycle in October of this year. So once we will reach new highs, you should be very careful, especially if you consider that we are looking for a push into a fifth wave right now. Okay, so be very careful up there. Of course, for now it looks like a very nice, beautiful ongoing strength here, but still keep in mind that now when Bitcoin has made a very nice move to the upside, even broke above 100,000 level, there will be some new inflows. A lot of optimism is already visible on cryptocurrencies, but now there will be some flows or rotation from Bitcoin into alts, okay? And we can already see that there are some Bitcoin dominance that is coming significantly to the downside, while Ethereum dominance, for example, is picking up. And before I go to these charts, I want to also to highlight that we have these 5 waves up. So these 5 waves suggest that we could possibly slow down. So in my opinion, even if it breaks sharply to the upside, there can be maybe much better wave structure to discover potential opportunities on altcoins rather than chasing Bitcoin up here. Looking at here, as I said, Bitcoin dominance, we are reversing significantly, breaking this channel support. So obviously we are pausing here, and there are flows into, as I said, other coins. Here we can see that Ethereum dominance is picking up quite nicely, even approaching maybe the 10% very soon. Now looking at Bitcoin, at Ethereum wave count, here we had a very nice pause and consolidation and very deep retracement, and we have been watching this as a first support around 1,500, and so far we can see some very nice recovery here, okay? And it makes me think that maybe we are in the middle of this triangle still, but we could possibly progress higher into the upper side of this range. So watch out for potential free wave rise, and so far this looks like we are seeing a break out of a base channel rather than some kind of extended wave C, which I firstly thought it's going to be possible, especially because I was considering that Bitcoin could, or cryptos in general, could slow down when Bitcoin will touch 100,000, but this is not happening. And now what we are seeing is that there are much more flows into some of the altcoins, and this can keep, obviously in my opinion, also Ethereum, which is some kind of a proxy for altcoins in uptrend. So in the Ethereum, after pullbacks, I think that there is going to be a room for more gains. Also looking at Ripple, and I said this I'm not sure if I mentioned this in our webinar or I did discussed in our members video update, but I said that Ripple has made plenty of times in the past that firstly he was very slow when Bitcoin and other major coins were moving to the upside, but then after some kind of a pause, Ripple surprised and moved to the upside on its own. And I would not be surprised if that would be the case right now. We are breaking out of this downward channel. It was a correction and we were tracking this one pretty closely for the last few months, and looks like that we are now could start attacking even all-time highs in the next few weeks. Maybe now, who knows, maybe already in the next few days. But overall, I mean, the price action looks good as long as we are trading still above $1.6. Traders, thank you very much for your attention. I hope that you enjoyed this presentation today. If you are interested in more, make sure to visit us at wavetraders.com and check what we have to offer. Also, make sure to subscribe to our channel here on YouTube, and don't forget to press a like. Okay, traders, good hunting this week. Bye.